Hello, welcome to our midweek business news report. It's now time to bring a feature on the show today as we're focusing on the cryptocurrency market. Now, it was a banner year for digital assets in 2021. According to some forecasts, the new year should see cryptocurrencies reach new milestones. Crypto investors went on yet another roller coaster ride in 2021, and nearly every cryptocurrency from Bitcoin to Dogecoin also hit record highs and delivered eye-popping gains. But in May, about 50% of the entire market's value was wiped out in just 7 days. And by September, we saw China's clampdown against crypto escalate to a ban on all transactions. Other wild crypto moments from 2021 came when El Salvador made Bitcoin a legal tender, meme tokens exploded, and an NFT sold for $69 million. So what's in store for 2022? Well, some believe Ether will outperform Bitcoin. Once again, long viewed as a second fiddle, Ether far outperformed Bitcoin last year, gaining about 418% compared to the 66% for Bitcoin. Well, joining me now to discuss this and much more, looking at the pattern we expect for the year 2022, I have Alex Lightman, the chairman of CoinField. Thank you very much for joining us on the Breakfast Show this morning, Alex.
Hi, David. Thank you for allowing me on the show again.
A happy new year to you. Now, let's start a conversation with your analysis, really, of the cryptocurrency market performance for last year, for the likes of Bitcoin, Ether, also Dogecoin, and talking about all of the rise and fall patterns we saw. What were some of the major highlights for you, really?
Well, the first thing is that Bitcoin hit all-time highs 2 or 3 times, depending on how you're measuring it during the year. We saw the rise of the first exchange-traded fund, ETF, meaning institutions are now getting more of the toolbox that they're used to have with fiat currencies. You saw Elon Musk, one man, become the richest man in the world, and also through his tweets, even through his emoji, Bitcoin with a little broken heart emoji crashing the price of Bitcoin, or going on to Saturday Night Live and then buy on rumors, sell on news, or sell on Elon's appearance, crashing the price of Dogecoin. And we saw Dogecoin go from the 70s down to, I guess it's about 14 cents right now, but it's still worth over $20 billion. Bitcoin is worth almost $900 billion. Ethereum is worth $386 billion right now. It's amazing how things that are so valuable are so volatile. And so over time, cryptocurrencies are supposed to get less volatile, but we don't know if that's actually true, because they used to be separately cycling from the stock market. They were uncorrelated assets, and now Bitcoin and Ethereum at least have become correlated assets to the stock market. And then the really big thing that we've seen is the Federal Reserve saying that it's going to raise interest rates several times this year, and starting in March 22nd or so, it's not going to be doing as much buying of the US government's paper, and so people are not going to have this constant pump of money into the market. And then we also saw in Nigeria the e-Naira, central bank digital currency, and we see, as you said, El Salvador choosing Bitcoin. And so now we have a big experiment going on, a scientific or political scientific experiment of which plan, a central bank digital currency or standardizing on Bitcoin, which of these models will prove to be most useful to the public. And on the one hand, sorry, go ahead.
Okay, now, Alex, for this year, let's take a look at new twists you expect. What new twists are you expecting, especially within the realm of forecast we are prepping ahead for the year?
Sure. Well, one of the things is NFTs are getting the public excited about cryptocurrencies. And so what you're going to see is more and more cryptocurrencies launching their NFT market. And some cryptocurrencies are run by nerds. They're run by people who have no artistic talent, no real connection to the people or trends or athletics or celebrities. And then you have cryptocurrencies that have people who are very interested in popular culture. And so whoever handles NFTs better could actually influence the value of that cryptocurrency. And then the other thing that you have is the metaverse. This was a term that came up in Neil Stephenson's book, Snow Crash. And the idea is something that you can immerse yourself in and feel like you're in another world, computer world, and you can meet other people. I actually was using something that was made by Rob McGregor back in the 90s. He raised $40 million and people would interact with people in that environment. And so we're going to be seeing probably $10 billion put in by Meta, which is what Facebook's new parent company name is called. We're seeing the Winklevoss twins coming in with $400 million for their metaverse. And we're going to see probably 20, 30, 40 metaverses. I'm sure that somebody in Nigeria will come up with a good one. And we're going to have a whole new basis of competition. We're also going to see, I think, an implosion and the destruction of unregulated crypto exchanges. And so people aren't really clear on the difference between regulated crypto exchanges and unregulated exchanges.
Let me just button here now, for the lack of time now. Wrapping up our conversation, let's look at forecast and fresh prospects for this year, looking at insights we should expect from CoinField and Tingo. Just in about 30 seconds, let's just have the forecast we would have ahead.
Sure. For CoinField, we're launching the CoinField coin, which will have, I think, a nice impact on farmers. It's going to be for food. And for Tingo, Tingo will become a Nigerian company that will list on the New York Stock Exchange. And I think it should go up quite a lot. So I think Nigeria will be very proud of Tingo's performance in 2022.
Exactly. Thank you very much for your time on the Breakfast Show this morning.
Thank you, David.
Alex Lightman, it's been a pleasure speaking with you. I will keep our fingers crossed to all of the intricacies that will play out this year. Thank you once again.